Hey, what's going on, guys? It's Daniel, one half of the Kwak brothers. What you're about to see is our full interview with Peter Schiff, in which we talked about the economy, we talked about Biden, and we actually even also talked about the Great Reset, and we got his reaction. So with that said, guys, I hope you enjoyed the interview. Don't forget to like, subscribe, and also share this video. All right, cool. So let me go ahead and kind of first start with the first question. Again, thank you so much for being here. It's an honor for us. But in terms of economics, I follow you very closely. You've spoken a lot on inflation recently and how our economy is now too dependent at our very low interest rate state that we are currently in. And actually, I heard you reference multiple times how even back in 2008, the lowest we've gone was at 1%. So with that said, what would you say are kind of the top 2 or 3 myths that a lot of the people, whether it be media or other, influential voices in the economic space, what would you say are kind of the top 2 or 3 myths that people have right now about our economic outlook?
Well, first of all, the lowest we went in 2002 timeframe was 1%. That was the initial Fed response to the bursting of the dot-com bubble and the September 11th terrorist attack. So that time the Fed went to 1. After the financial crisis in '08, that's when they first went down to 0. And we went back down to 0 again in the aftermath of COVID, or shortly after COVID arrived on the scene. The Fed quickly returned interest rates to 0. And it's not just that we depend on 0% interest rates. It's our addiction that has made us dependent. It's this phony economy that we have that depends on 0% rates. And so in order to keep this phony economy going, the Fed has to keep rates at 0. And in fact, that's not even enough. The Fed has to do quantitative easing. The Fed has to constantly intervene in the bond markets and buy up. Currently, it's buying $120 billion per month of government mortgage-backed debt. That's more than it did at any point during the Great Recession. In fact, the QE program that the Fed began with COVID already is larger than all the QE programs done during the financial crisis period and the Great Recession combined. So that's where we are. But it would actually be good for the long-term health of the economy for the Fed to stop doing this. But the short run would involve a lot of economic pain as we transition from this phony bubble economy into a viable real economy. Just like if somebody is a drug addict and they're addicted to heroin, it would be very good to kick the heroin habit and to stop taking heroin. But obviously, in the short run, there's a withdrawal period where your body is going to have a violent reaction to the loss of that drug that you became so addicted to. And so you're going to have this period of time where you feel a lot worse than when you were taking heroin. But ultimately, you'll be much healthier and feel much better if you can get through that period. And that's where we are economically. We're addicted to cheap money. That cheap money has created a very unhealthy, unstable economy that has resulted in a lot of problems that we point to now, and a lot of these problems get blamed on capitalism or not enough regulation. But it's really a byproduct of bad monetary policy and also bad regulatory and fiscal policy. But a lot of that is being subsidized by the bad monetary policy. So we need to allow interest rates to go a lot higher. The government has to stop, or the Fed has to stop monetizing government debt. We have to shrink the Fed's balance sheet. And if we do all that, in the long run, we'll have a much better economy. But in the short run, it's going to feel like a disaster, just like it feels like a disaster when you check into rehab.
Yeah, no, that's a great point. Peter, you said something that really stuck out to me. You said in passing that a lot of times people tend to blame capitalism. And I think for, me being 27 years old, my generation, we're very guilty of that. A lot of individuals that are around my age range, we're starting to be a little bit more privy to the idea of socialism in particular. And we blame capitalism. And a lot of these individuals are calling for the government to intervene, for them to print more money, to give out more stimulus checks, which, I recall you saying during a podcast, we've never done that. Even during the Great Depression, we never, gave the people the money. in mass forms like we're doing now. Would you say that's one of the top myths that, is occurring right now economically, that we need to give people, trillions of dollars in stimulus checks?
Well, we started those programs in the 30s. I mean, relief, was introduced, which we now call welfare, but that program was introduced during the 30s. So were food stamps. So that's when the government initially began to give out money. And, early on, when people first started giving out money, a lot of Americans didn't want to accept it. I mean, they felt very guilty about taking it. And there are a lot of stories, too, about people who, once they got jobs after the Depression was over, they repaid the money. They went back. They felt so guilty about accepting money that they didn't earn that they went and paid it back. I mean, so a very different attitude that Americans have today that feel just entitled to free money, because free money isn't free. It comes from your neighbor, right? Somebody had to pay that money in. And so at least back in the 1930s, Americans felt guilty about stealing from their neighbors. Now people feel entitled to whatever their neighbor has. They feel that they should have it. They should have it too. Yeah, and it's actually, the government not only blames capitalism for the problems it creates, but it takes credit for the good things that capitalism creates. Because all the things that we have that we value, and everything that has improved our standard of living over time, all that stuff has come from capitalism. Yet the government tries to claim credit for a lot of this good stuff. They say, oh, it's because we had these regulations or because we had these programs. No, we achieved what we did despite the fact that the government put roadblocks in our path. That's how powerful capitalism is that it can even overcome all the stupid things that government does that screws up the process. But sometimes government's interference creates such huge problems that you get a crisis, like the 2008 financial crisis. And then when that happens, the government is quick to say, oh, you see, look what capitalism did. And the truth is, capitalism would never have produced the '08 financial crisis. It was government intervention in the market that distorted everything, that created the moral hazards, that led to the reckless risk-taking, and which ultimately collapsed, in the financial crisis. But then the government, when they blame capitalism for failures that are the result of government intervention in capitalism, they say what we need, the answer is more government. We need bigger government to try to make sure that capitalism doesn't screw us up again. And so then government gets even bigger. And so the next crisis that it causes will be even worse. And then, of course, they repeat the process. Oh, my God, capitalism is even worse than we thought. We need even more government, right? And so it's an endless cycle of more government creating more problems. And all the while, capitalism keeps, taking it on the chin as far as its reputation, because the public buys all the nonsense that the government is selling about the cause of the problems.
Yeah. So you would say one of the biggest myths, related to the economic outlook is that government intervention is a good thing.
Right. I mean, government intervention is a bad thing. I mean, sometimes it can be a good thing, but, there's, too much of a good thing is a bad thing. So, if you're talking about local government, you're talking about police, you're talking about fire department, right? So if my house is on fire and the government intervenes to put it out, I mean, that's a good thing. I mean, obviously, we can have private fire departments that would also put out the fire. But in case we have, decided to have a government fire department, yes, it's a good thing that they intervene to put out the fire. The problem is, the government is out there setting fires, right? And then when they put them out, they take credit for putting it out, but they never accept responsibility for setting the fires in the first place.
Yeah, no, that's very true. That's very true. Now, speaking of government, I want to ask you a question about our president, Joe Biden. A lot of people have a lot of comments back and forth, but, Peter, you're one of the greatest economic minds, in my opinion, that we have right now. What would you say, if you had to give Mr. Biden a grade in terms of how he's doing economically as president? What would your assessment be?
Well, I mean, you get an F minus, I guess, or unless I can come up with a lower grade, then maybe an F minus or something like that. I mean, but it's not like I gave Trump, a good grade either. I mean, the bigger difference between Trump and Biden seems to be on foreign policy. I mean, because Biden's getting an F there as well. So, I'm not sure the grade I would have given Trump, but Trump wasn't that bad on foreign policy. And that's not really where my expertise is, but you don't have to be an expert to recognize that Biden's foreign policy is a complete disaster. But the problem with Trump on the economy was that he was a big spender. He made government bigger. He cut taxes a little bit, but to me, taxes is not the real, burden of government. The burden of government is spending. Taxes is simply one way that we pay for that spending. But if we don't pay for it one way, we're going to pay for it another way. So the important thing, if you want to relieve the American public of some of the burden of paying for government, the way you do that is you make government smaller. You cut government spending. That is the only real way to lighten that load. But unfortunately, Trump made government bigger and more expensive. He increased spending on the military. He increased spending on welfare and various domestic programs, all the while continuing to allow all the entitlements to grow unchecked on autopilot. So Trump made the economy, the government bigger, and so he weakened the economy. The trade deficits got larger under Trump. I mean, Trump campaigned to make the trade deficit smaller, and instead they've hit record highs. So the budget deficit hit a record under Trump, trade deficit hit a record under Trump, government spending hit a record under Trump. Of course, all those records have since been broken under Biden. So he's continuing Trumponomics, only worse, because even bigger increases in government spending, even larger deficits. And so it's, the problems are, continuing and getting worse.
Yeah, and that's unfortunate, right? And even for me as a real estate guy, I'm hearing a lot of the Biden administration proposal to give credits here and give money there, especially when it comes to the housing market. And obviously affordable housing is quite the issue. Now, I want to get your take on this, Peter. Now, when it comes to the housing market, obviously that's an area you've spoken on in the past. A lot of people have been going back and forth, especially on YouTube, about their similarities with now in 2008. And well, no, there are differences, and it's a completely different story. In looking at current housing market status, what similarities, differences do you see now versus 2008?
Well, I would say that the degree of speculation in the housing market was higher then, as far as people owning multiple homes, zero down, no doc loans, liar loans, teaser rates on an arm. I mean, it was crazy back then, but that was the result of the Fed's policy at the time, but also Wall Street was securitizing a lot of these subprime mortgages that Fannie and Freddie was buying up aggressively. And you had all these cash out refis, but a lot of this, of course, all of it rather, was a result of the Fed and the moral hazard of Fannie and Freddie and government guaranteed mortgages, government insured bank accounts. I mean, this was all fueling that. I mean, that's happening today, but to a lesser degree. But you also have artificially low interest rates, and you have government subsidized mortgages. And so people are still overpaying for homes, using money they don't have, taking out loans that they probably can't repay in real terms. And so housing prices are being inflated by Fed policy. And so that's helping to make homes less affordable. And of course, all the inflation that the Fed is creating is causing construction costs to go up dramatically. So it's very, very expensive to build new homes. So a lot of the housing demand that is coming from all this money printing, that people are having to bid for the existing houses because it's too expensive to build new ones because of the material costs, because of the labor costs. And so you're bidding up the price of existing homes. But of course, if you own a home, the cost of maintaining that home is also going way up. Your utilities are going up, your insurance is going up, your maintenance costs are going up, your property taxes are going up. So everything associated with home ownership is going up. But I think one of the big problems that we're seeing now, because this maybe is something that would hit home for you, has to do with the real, villainization of the landlords. And, this new idea that whenever there's a problem in the economy, tenants don't have to pay their rent. And this rent moratorium, I mean, clearly it's unconstitutional, but that doesn't seem to stop the government from doing stuff. And of course, it's unconstitutional on a federal level, but there may not be anything that stops the states from imposing these type of rental moratoriums, depending on their own constitutions. But a lot of people have really taken advantage of these moratoriums because a lot of people that were unemployed during the pandemic were actually getting more money from the government than they were earning when they had jobs. So they actually had more money to pay their rent. Yet they didn't pay their rent either. Even though they had more money, they didn't pay their rent because the government said, hey, your landlord can't kick you out if you stop paying your rent. And then people were like, well, I'm just going to stop paying my rent because if he can't kick me out, then I'll just live here rent free. And there have been people doing this for over a year now. And eventually, the landlords are going to be able to kick them out, which means they're either going to get kicked out or they're going to have big increases in their rents. But I also think this really makes the whole business of landlord, it makes it a lot riskier because your cash flows from your leases are a lot less dependable if you know at any moment the government could just decide that your tenants don't have to pay you. And so that extra risk means that the rents have to be a lot higher to make up for that risk. And I also think it means that fewer people will want to own rental properties that rent to the type of people, the class of people that are likely to take advantage of those types of moratoriums. And those tend to be lower income people, because if you're upper income or you have some kind of means, if you stop paying your rent for 6 months or a year, your landlord can still sue you and go after your assets to cover the back rent. But if you don't have any other assets, if you're just in debt, you have credit card debt or student loans, you have a negative net worth, you don't own anything, you can't get blood from a stone. So the landlord can't do anything against the tenant that doesn't have any assets. Now, that tenant may have a job and he may have income, but even getting to attach a paycheck is pretty difficult. And then, of course, the guy just says, well, I'm hardship or I'm bankrupt, and you can't do that. So I just think a lot fewer landlords are going to want to get into this business. And so the supply of homes available to low or moderate income is going to really shrink, which means the rents are going to skyrocket. And then once again, what's the government going to say? Oh my God, there's no affordable housing. Oh, see, the free market doesn't provide affordable housing. Well, it would have provided it if the government didn't screw the whole thing up. And it's not just this, it's rent control and all sorts of other things the government does to interfere with the free market so that this need is not actually met. And now the government says, well, the government's going to meet the need, but then the low-income housing costs a fortune because the government provides it. And when the government provides it, it costs a lot more than it costs when the free market provides it.
Yeah, no, that's a beautiful point. And that actually leads me to a two-part question. And I'm just writing down notes, right? But that leads me to a two-part question. You just brought up the eviction moratorium. Obviously, as you know, the Supreme Court voted 6-3 to end the eviction moratorium after a year or plus some change. You also brought up government subsidized housing. You brought up the cost of labor and materials, which obviously have skyrocketed, and we haven't really seen much of it go down. So in your opinion, two-part question here, where is this all leading? And the second part of the question is, if not in rental housing, where, in real estate, where should we put our money? Where should we invest that?
Well, the thing is, you have to have your money in real things, so real estate is real property, and it's going to have value, right? I mean, now, obviously, that can change, because circumstances can change. So neighborhoods can go out of favor, and so now they're not as desirable. But all of a sudden, a neighborhood could become more desirable. Like I think now, with a lot of people working from home and how this is changing, it's not as desirable to be in the city. it's now more desirable to be an hour outside, which might have been undesirable from a commuting point of view. But now that you don't have to commute anymore, some of these locations are now a lot more desirable than the other ones. And now people might have a premium on a larger home because they need a home office or they need a bigger yard for their kids to play when they're homeschooled or whatever's going on. So you're going to see like these things will affect real estate. But, I think owning real property that you can live in, that you can rent out, at least to people who will pay you, there's value there. There's value in land that, you can farm or that you can use to extract other resources, timber or mining. So that type of property is going to be valuable. I think some of the commercial property, if it's shopping centers, strip malls, that stuff's going to be in trouble. Office buildings going to be in trouble. But industrial buildings, those could, that could end up having more value in the way I see the economy evolving eventually. But you got to get out of paper, right? So you can own real estate. What I mainly do for myself, although I own some real estate too, but I own a lot of stocks, which to me represents ownership in companies and businesses. I mean, you can own your own business, and that's, another hedge, own your own business. But you can also own small pieces of other businesses, which is what you own when you're a stockholder. But I'm not just, buying, stocks because they're popular, on Reddit or something, and there's like some meme and the stock is going up. I mean, I want to buy a business where I want to own that business. So I'm looking at the cash flows, I'm looking at the dividend yield, looking at the balance sheet of the company, trying to look forward at its business and its products and its market share and things like that. It's like, is this a business that I want to own? I mean, if I could own the whole business, would I want to own it, right? I mean, you're looking at a stock like a business because I want to own those real assets. I want to own the plant and equipment. I want to own, their intellectual property or their goodwill, their brand. I mean, everything that goes into that business. Because I think that we're going to have this massive inflation and paper is going to get, wiped out. I mean, maybe it won't lose all of its purchasing power. It's going to lose most of its purchasing power. I mean, you think about how much purchasing power the dollar has lost over the last 50 or 100 years, right? Well, it can lose as much, if not more, over the next 5 to 10 years. We're going to just compress the time period with which the dollar is losing purchasing power. And so we're going to see much more pronounced increases in consumer prices. What we're seeing right now, what the Fed is dismissing as being transitory, is actually the tip of this huge iceberg. We're just getting a small taste of what's going to happen when it comes to consumer prices. So I want to hedge my purchasing power. And so I don't want to be in paper. So you don't want to own bonds. You don't want to be the one that loans money to somebody to buy real estate. You want to be the one that borrow the money. Or you don't want to be the lender in an inflationary time period. The lenders lose. The debtors are the ones that win because they repay the debt with cheaper money. The lenders are getting repaid in money that has less value. So I want to own real things. And I also buy gold and silver as a better form of money, of savings than the fiat currencies that are being debased. And I like to own businesses, mining companies that have a lot of gold and silver in the ground. They own these reserves, these deposits, and they have the ability to extract those deposits in the future and sell them when the price is going to be much, much higher than the price is today. And so I want to buy these assets today before the market really prices that in or understands how much higher the price of gold and silver is going to be in the future than it is today.
Last question for you, Peter, before we get you out of here. And I want to hear your reaction to this. Now, this is something that we've been releasing on our channel quite a bit. And it's got, quite a bit of a buzz, right? People have been really enjoying this content. And it's this concept called the Great Reset. And I don't know how much you know about it, but pretty much what it is a proposal by the World Economic Forum to pretty much reset the entire global economy and global politics to pretty much have more of the control be under a much bigger globalized government. And as a matter of fact, one of the biggest taglines of this Great Reset concept is you will own nothing and you will be happy by 2030. That is the proposal. And it's actually not a conspiracy. If you actually go on the World Economic Forum website, the Great Reset is actually the first thing to pop up. So Peter, you're chuckling. I'm curious to hear what's going on in your head.
Well, first of all, I mean, the odds of that happening are very slim. I mean, it seems like the trend in the world is to, have larger governments break apart into smaller governments. I mean, look at what's happening all over Europe. I mean, they tried to, they pulled a bunch of nations together with the EU. But, now, you had the British Brexit, and you have other people talking about exiting the European Union. But you have a lot of countries that used to be one country now that are now 3 or 4 countries. The same thing may eventually happen to the United States. We may break apart. So who knows? I mean, I in general, I think when it comes to government, small is good, right? The smaller, the better. And you want government to be more local, right? So it's more responsive to the people that are being governed. And more, and so the people who, if you're going to have elections, so the people who are electing people, the people that are electing are beholden and responsible to this group of electors, people who elected them. And, the community, so you have a community and the government wants to spend money. All right, well, you got to tax the same people that are getting the benefits, right? You can't make believe that we're going to, put in some program, but we're going to make somebody else pay for it. That's, everything should be local. I mean, that's why if you look like in the US, I mean, you have city governments, you have county governments, you have state governments, then you have the federal government. Most stuff should be done at the local level. We have it upside down. We have most stuff being done on the federal level, at least most of the spending, right? That's not how it was supposed to be in America. Like America, we were a federation of independent states. The states were sovereign. It was like each state was a country, and we had a federal government that kind of, unified them. But it was the whole concept of the federal government was more about focusing on war, stuff like that, external foreign policy. It's like all these states got together to outsource a common foreign policy to a federal government. I mean, all the domestic stuff, everything else was supposed to be the province of the states, and the federal government was supposed to be very, very small, right? Almost like an afterthought. But, it got bigger and bigger and bigger. But I think the real trend is going to be to dismantle these massive governments that are so distant from the people that are being governed, to just have smaller governments, more localized. And so, so that's the kind of reset that I want to get behind, not, just going towards, world socialism under a single dictatorship. But I don't know how any of these individual governments would want to cede their power to some larger government. It's hard, especially for the whole world. But, where we could use a reset is on all the debt. We do need to see debt defaulted on because it's impossible to repay it. Central banks are trying to solve the problem by keeping interest rates at zero so that we can take on even more debt, right? The reason interest rates are at zero is because we have so much debt, nobody could afford to pay the debt if rates went up. But by keeping them at zero, we end up with even more debt. So what we need is less debt. And the way you get less debt is let interest rates go up, and then a lot of the bad debt will default. And that's how we get out from under the debt problem. But then we're able to rebuild legitimate savings because now we have interest rates that are high enough to encourage people to start saving. And that's going to provide, the seed corn for real economic growth because that saving can be invested in capital formation to make labor more productive and increase the supply of goods produced and all this good stuff that flows from savings. We're not getting that right now because you'd have to be an idiot to save your money because you're going to lose. If you save money, the inflation is going to erode away the value. You get no interest. And everybody is incentivized to borrow. And so, that's why, we have no real economic growth. We just have, bubble blowing.
Yeah, and that's a very good point. So, Peter, Thank you so much for joining us. So in case people don't know who you are, where can people find you? I know you have a YouTube channel. So tell us, what's the YouTube channel? I know you have an Instagram. Why don't you kind of tell us how we can find you?
Sure, I'm on social media. I'm on Instagram, Peter Schiff, Twitter, Facebook, YouTube. My podcast, I post those on my YouTube channel. I usually do a couple a week, sometimes more, sometimes less, depending on how busy I am and how big the news stories are in the economy and the markets, things like that. But you can listen to the podcast on Schiff Radio. Schiffradio.com is the website. It's on all the platforms, iTunes and places like that, where you can listen to podcasts. But you can also watch the YouTube version of the podcast on my YouTube channel. In fact, that's where I started. I started YouTubing. And so I still have a pretty big following on YouTube as far as people listening to my podcast on YouTube. And sometimes I do some special things, Q&As or different things. And I also produce some interesting videos. The most recent one I did was on the 50 years post Nixon severing the last link to the gold standard. So I made a video on that. And so I put up, some special productions too on the YouTube channel. But important too for people, not just to follow me, but to actually heed the advice that I'm giving with respect to the need for protecting yourself from this inflation tax, which is really what inflation is. It's a tax because the government creates the inflation in order to pay for government. And so prices go up, and that's your tax. So instead of the government taking your money so that you have less money to buy stuff and then you buy less stuff, the government takes your purchasing power, gives it to somebody else, they spend the money, that causes prices to go up, and now because prices go up, you can't afford to buy as much stuff. So in either scenario, taxation or inflation, you buy less stuff. And the reason you're buying less stuff is because the government took it from you. Right? So inflation is a tax. You want to avoid it. You got to get out of dollars, dollar-denominated assets. You got to build an inflation-proof portfolio, prepare for a dollar crash. That's what I'm helping my clients do at my companies at Europe Pacific Asset Management, with my separately managed accounts, with our mutual funds. You can get them through your current broker, your discount broker, or you can call up and talk to my guys at Europe Pacific Capital, Europe Pacific Asset Management, and we can help you set up an account, build a portfolio. You can transfer over an IRA or something like that to get out of the dollar. Also, I encourage people to own physical gold and silver. Schiff Gold is the company that I'm recommending that people go to buy that gold and silver. You're not going to get pressured into buying overpriced numismatics. The markups are very low. I just heard the other day, I was listening on television, and some company says, hey, we're going to give away $1,500 of free silver, with your first purchase. Yes, because they charge you $5,000 more to buy it. And so they give you back a little bit of what they're ripping you off of. And, no one gives you $1,500 worth of free stuff, right? It's always a catch. So right. a lot of these companies have these huge markups. They're making a fortune ripping people off who don't know the market. So if you go to Schiff Gold, that's not going to happen. You're going to pay a very, very small markup over our cost for the gold and silver that you buy.
Awesome. Well, thank you for spending time with us, Peter. I really appreciate it. It's been an honor and pleasure for me. Thank you for being here.
All right. Thanks, Daniel.
Hey, guys, I hope you enjoyed this video. And as a reminder, please don't forget to like this video, subscribe to our YouTube channel, and also share. It really does help us out in getting the financial truth out to as many people as we possibly can. So with that said, guys, thank you so much, and I'll see you in the next one.